All right, everything looking good. We should be live any minute now. Let's go ahead and get it started in the meantime. All right. Welcome back to the channel, Crypto Trend Trader, with our Sunday evening market look ahead. It is 8 p.m. Eastern Standard Time on January 29th, 2023. And as always, before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. Awesome. Appreciate that. What's up, Durwood? Jay Hoff in the house. Good to see you guys. All right, cool. Find those dirty C's. I know that's right, but it's not what you think. I gotta love the community. I think we have more inside jokes than probably anybody else on planet Earth. So today we're going to start off here a little bit different. We're going to jump in and take a look at the 210 spread. Obviously, a lot of these things kind of come and go. They're sort of like popularity. You know, everybody's talking about them 1 minute and then nobody's talking about them. It's time we do that deep dive and take a look. We haven't looked at this for a while. And obviously, we have a little bit of development in the recent couple months here. So again, we have the green verticals are the time cycle bottom. The red verticals are the time cycle tops. And then we see the Fed pivot in yellow. The dotted yellow is the quote unquote market priced in estimated future Fed pivot. And then recession is the white vertical. And then, of course, the spread between the two is our orange area right here, where the 2 is the blue and the 10 is the actual orange line. So this thing's going back to the late 80s. Obviously, that was our big Paul Volcker moment. Since then, interest rates have been trending down, obviously reached zero, basically. So from that point, we broke out from a series of lower highs, and now we have a new high. That was a break of resistance and essentially moon time on rates. Theoretically, you don't know. A lot of times we break out, we come back and test it, and then later on we go higher. The most important thing is that it looks like the forever trending downward rates is over. So even if we come all the way back down and we stop at, 0.5% or 1% or something like that, that's still, substantially higher than zero. So, and, this chart is deceptive, because here is 0.10 way down here at the bottom. And then we have, 1.10 here. So that's a 1% move to the upside. So when you hear Kathy Wood talking about interest rates have gone up by 400 million%, and it's like, yeah, okay, take any number, multiply it by 0. You know what I mean? Get out of here. It doesn't go by the actual change in rates when you're factoring from, 0.10 or 0.1% or essentially just 0. Of course, anything is going to look like an insane amount of upside from that. The point is that the actual net change in percentage is what matters. Or, when you focus on like basis points and stuff like that. The previous cycle low was essentially 0.2, and then we went to 0.1. So the next one, we have to go basically all the way to 0, or maybe we come down and don't put in a lower low, and at that point in time we're starting a potential uptrend. So I told you all that so that we can move on from here. So obviously we know what's going on here. We have a confirmed breakout. It looks like we're finally not going to be trending towards 0 with interest rates. Doesn't mean that we still have a deeper dive. What it does mean, though, is when we look at how this time cycle analysis, the Fed pivot, the recession plays out, we know for sure that after we get the Fed pivot, shortly afterwards we get recession. After we get Fed pivot, shortly afterwards we get recession. They correspond with the various highs. Here, obviously, we don't get the Fed pivot because the cycle essentially skips a top. And then here we are right back to it. Fed pivot, recession, capitulation. And then eventually here, this is where people are pricing in that Fed pivot. So if the Fed pivot is coming, we know, a few months down the road, roughly somewhere around what would be the time cycle top based on the red lines, we're probably going to have a recession. So we have a lot actually lining up telling us that, hey, even if we do end up making some short-term all-time highs, we probably are at least headed back down low into some kind of recession, and then we'll kind of see from there. We don't know. Is it going to be really bad starvation, depression, or is it just going to be like mild soft landing recession? But regardless, very important to keep this in mind, because this is essentially where the market has been pricing in that pivot or the peak on rate hikes. So essentially what they're saying is, hey, Jerome Powell is going to get up with, his peeps in a couple days, and they're going to raise rates another 25 basis points, and then that's it. That was the peak of rates for the cycle. So as soon as that doesn't happen, maybe it does, and everything just works out perfectly. It's definitely a possibility. Assuming that doesn't happen though, let's say we come back down here and then we eventually end up trending higher. Let's say we end up just going higher from here. That's when essentially the difference between what's priced in and reality. And that's where the big moves could come in the stock market, because what's priced in now represented by the prices of assets based on, earnings or just loose money policy, whatever we're looking at. So if we start seeing disparity, say, for instance, the Fed hikes 50 basis points at the next meeting, or maybe they hike 25 and then they hike 25 again. Maybe they hike 25, then 25, then 25. Regardless, that's when the market has to start adjusting and making up for what is and isn't priced in. So we're already at that level. So we're a couple of days away from, reality becoming a thing again. And, I don't know what's going to happen. Obviously, the market's saying 25 basis point hike. Could Jerome Powell come out, shock the markets, go with 50? Sure. Could he come out and just do what everybody expects? 100%. 100%. And I think there's a lot of tightening in the system that hasn't been fully realized yet. And honestly, at this point in time, up near 5%, in my opinion, it's not as much about how high we go from here as much as it is for how long we stay at this level. I've mentioned this quite a few times, and let's just say tomorrow the Fed hiked rates to 20%. Sure, lots of people buying bonds, all kinds of changes in what's going on, but we don't see companies going bust. We don't see people losing their houses. We don't see like full on struggle the day that the Fed hikes to 20%. Like, sure, there's going to be some stuff that breaks in the system and some changes, but it's actually when people go to refinance their debt or roll over their debt, that's when they start to actually matter. The rates don't matter if you're locked in for the next 30 years. The rates don't matter if you're on a 10-year rolling basis. They only matter when it's your turn to be due, and then you have to refinance. So that's where the real time capitulation comes in. Rates just staying high is actually a lot worse than rates spiking and then coming back down. For the markets, for asset values, for the functioning world economy, etc. So that being said, TNX coming down here, still bouncing that support, not quite at the 200s, still in a nice little downtrend. Seems very likely it hits support and gets some kind of bounce. We have bullish divergence on the daily. That's very important. Obviously, when this reacts, it could just react, get a lower high, but we would expect some kind of bounce on this. And we see again, I'm not one to call tops and bottoms. Actually, I say that a lot. And then of course we do call a lot of tops and bottoms, and we do it pretty well too. But, it's not a good habit to be in. But, with risk management and clear defined levels, whatever, you can make anything an acceptable bet, trade, whatever. But just don't get it. It's a bad habit for a lot of people, and they get obsessed with it. And the next thing you know, they lose all their money and they realize they had a good system. They just deviated because of greed. That's really what it comes down to. So that being said, DXY is next. So continually putting in new lows. Again, we see, a trending up here, a much higher low, and we're above the slope line. Once we're above the slope line and the slope line flips blue and then we start trending to the upside, a lot of times that corresponds with a bullish divergence and a breakout. So the first level to watch is obviously getting above the 8, since it's been just smacking price action down. We really haven't convincingly retested the 21, with the exception of right here and way back here at the top. So it seems likely we'll retest the 21 at some point in time, about 103. Now, could we go slightly lower? It's possible. It is possible. We come down here to the target. It definitely is. Again, this is just a hypothetical, target Fibonacci. So we'll really pay attention to if the DXY comes back up above 104.50 and backtest that ascending support as resistance. Then we'll look for, basically a backtest breakdown continuation. But in the meantime, that's just a little hypothetical thingy we're doing in case it hasn't actually bottomed. So really ignore that yellow stuff for now. Okay, so I guess we'll just we can check out magma really quick, see what's flowing out of this hot lava volcano. So Tesla's been just melting down here. Obviously, we entered into our initial trade at like 108, and then we doubled down with the 821 cross here. It was a little slightly over, like I think 136 or something like that. So the initial target has already been reached, the backtest of the channel. We also are backtesting the macro 236, the green 236. If we zoom out here, we have the blue 236 higher. That's our second trade setup. So we already hit the first trade setup. We backtested the descending channel breakdown as resistance. We shot straight through that, and now we're at the 236. So we have our first trade setup has played out completely, but we didn't take profits on that. And then also we still have a little bit to go on our second trade setup here. So we're kind of in the middle of the two. And essentially this point where we're at right now with the two entries, we're up about 45% on this trade setup. And, you know, if you were dividing your account into, say, 10 lots, we did one lot on the first one and then one lot on the second one. So now essentially our trade account is from 20% up to basically like 30% because of the 50% increase. So what we're going to do here is we're going to go ahead and close out 66% of the trade. So let's say you're starting with, just for simplicity's sake, we'll call it $100, and then you put in a second $100. So now you have 200 in, and then it goes up roughly, let's just say 50%. It's not quite that much. Goes up 50%. Now you have 300. So we're going to pull back out 200, which was our complete initial investment. So 66% of the total trade now. And then we're just going to leave the other 33 in for now to see, can we get that up here to hit that next target? If not, if we start to break back down, you know, we want to have some defined area. And in this case, it's going to be when we lose the descending channel as support, then we will close out the remainder of the trade and just keep those profits. Now, the alternative is if you're not as worried about growing your account and you're more just building positions in a bear market for free, that's essentially what we did. We put in 100 down here, we put in 100 down here, and then it moved up here. Now we can pull out our 200 and we have $100 of the market's money to do whatever we want with. Or, you know, 33% of our remaining trade value left, which is not bad because it's 50% of what we initially put in. You know, of that 200, we still have 100 left. So there's a lot of ways we can play this. You know, you can either build positions like this. Now, obviously, it looks like Tesla will keep going to the downside. But if that's not the case and it has bottomed, you know, we have a very nice entry from that level and a decent amount of positions still running. And then we can always buy back into strength. You know, but more likely than not, I think we come back up here, get a little further continuation and get rejected, or we're already going to get rejected and start retesting the lows. So even once a trade is a big winner, when you start hitting targets and everything like that, it's important to make sure that you're taking profits and that you have a plan for what's happening. And my plan, as long as we're still in a bear market, which we clearly are, we can tell by the 200s, as long as we're still in this bear market, I'm not looking to like necessarily build positions. Now, there is an argument to be made that say we do get that remaining push up here, that instead of just closing out the whole remaining trade that we have left, that we go ahead and just take some of the profits and then we leave some of the position and we just forget about it. That's what I tend to do typically. But to tell you the truth, it's kind of up in the air right now. It could go either way. We'll see what happens when we get up there. I'm more inclined to take part of the profits off the table, take my full principal back out, take part of the profits off the table, and then leave part of the position, you know, to continue lower. Because honestly, the lower it goes, the better for us, because we can keep scalping it, keep building a position, and then eventually get a nice entry. So, but you know, it might be a different situation for you. Maybe you're living off of the profits of your trade account, or you know, something like that. Maybe you'd rather have that cash money so you can buy an actual Tesla instead of Tesla stock. Fully acceptable. Or maybe you're going to betray Tesla and then you're going to buy a Toyota with it. That's fine too. So Microsoft had a nice move up here, retesting key resistance and everything. Looks like we get a little more continuation. Is it coming back to do the remainder of that trade again? Definitely a possibility. I think realistically, if this thing keeps running, 277 doesn't sound crazy, but it's not my favorite right here. So obviously we closed that Apple short. It ended up being, we shorted down to here, took half of the position off the table here. It bounced around forever. We started continuing down to our target, and then it moved all the way back up, and we basically closed here, and then we closed again right here. So realistically, we could have just closed right here and then just been done with it and not wasted all this time and capital and everything. But the truth is, you don't know. Maybe we were going to get that one last push down, and it just didn't quite happen. So, we took a shot. We ended up slightly ahead, but essentially just the same as if we would have just closed it on that initial push. That's fine. Again, still very important if we break above the 200s. Apple starts looking pretty juicy for continuation upside. It's back above key resistances. With the exception of 200s right now, there's not a lot holding Apple back. And some of these tech stops obviously have bounced the most. So we got to have clear, defined risk if we're going to enter into continuation trades on these. If something just went up 50%, you got to be careful. You don't want to eat the move back to the downside after that. So Google. So we did push up here and back tested the 382 on Google. We have bounced quite a few times off top of the level. You guys know normally when we're in a channel like this, I'm just buying support and I'm just selling resistance. So we'll see what happens here. We could see that breakout and a little bit of continuation. We're going to run into quite a bit of resistance at like 104. So we're basically holding this open right now, hoping for like 5%. But realistically, like we could see another 16%, 15%, something like that from where we're at now. We don't want to overstay our welcome in tech though. To tell you the truth, I'm really looking at taking a lot of profits on our recent trades off the table, just in between like the beginning of the week and the Fed meeting. I think there's definitely a possibility we could get a big surge to the upside if JP comes out like super, dovish and they hike 25% and then say they're going to pause for a while. Like there's definitely a possibility they come out and say, but right now I feel like a lot of the risk is actually to the downside. So I think I'm going to be a little more conservative and take some of these trades off the table early in the week before the Fed meeting. And then I'll just gladly re-enter higher afterwards, miss out on a few percent, but not take that like coin toss that we could drop 10% or pump 10% or more than that even. So Meta, the final trade setup, basically playing out the coin toss after the gap fill. So we did come back up here, retest the 200s. That's basically where we figured Meta would end. And then we have Amazon as well, bounce off of the, basically just double bottom. It just completely round tripped that entire move. Got a nice little bounce, back testing the previous breakdown level. There's definitely a possibility we see a little more continuation up to the 200s and the completion of our second trade setup. But the first one has back tested, nailed, and held for now. And then also, not to get overly bullish or to send mixed messages, I should say, since I'm talking about taking stuff off the table here, that's that gap fill. So it would be very easy for that to just pump up, fill that gap, hit the 200s, back test the 618, and then do whatever it wants to do after that. Yeah, that definitely seems like a possibility. What was I going to say about being too bullish about something? Oh, and the weekly close. That's what I was going to say. This is a pretty nice weekly close. Pretty much everything. We'll look at the major indices now, but pretty much everything was like up at around. Even if the daily close wasn't the best, which it was still pretty good, the weekly is pretty amazing. So U.S. oil, we had this little descending channel. Now we're starting to build, trying to come up here and backtest the 200s. It looks like having a little trouble getting through the 236 from the lows right here. But as long as we're putting in higher lows and higher highs right here, even if we come back down to the bottom of the channel, after that, we probably put in another high. So it looks like oil really is trying to walk up here to like this 85 to 90 level. We'll just see, because this is kind of the line in the sand. If we can't get back above this, we might break down and go to new lows. We'll see. All right, so Dow Jones on the daily. So we have been above the 200 exponential for a while. It looks pretty good, constructive. We're above the 200 simple. It's essentially flat slope at this point in time. Seems very likely it's going to flip up here bullish soon. And we'll confirm back into a bull market for basically, the first time since we left the bull market. Here we kind of a little bit. Here we tried to get back in the bull market and it failed. Here we're consolidating above that level. So the longer we spend up here, the more bullish it looks, in my opinion, as the 200s just essentially start walking price up instead of forcing price down. Here, every time we hit them, they push us lower. Here, we hit it, it pushes us lower. Here, we break through it, we come down, and then it pushes us higher. So, you know, it's like the reverse effect when the trend starts flipping. You know, and it doesn't sound that crazy when you really start thinking about, oh, 6, 7, whatever average percent inflation, you know, some fantasy 4% by the end of 2023, whatever you call it. Regardless, 4% plus the normal, what, 6% the stock market goes up, average, whatever. You know, so what, 10%? I mean, with inflation and normal constructive business, it's not crazy to think that we could go up more than 8.7%. You know, and that's just in 1 year. So all-time highs don't sound that crazy. So SPY, I've been talking about this for a while, and here it is. Descending channel, 200 exponential and simple. We broke out. We closed a week above that level. Let's slap on the weekly so we're not just talking about it. We're looking at it. I mean, you check that out with your own 2 eyes and tell me what you think. We backtested the 200s. You know, we finally got above the 821. It failed. We got back above it again. We flipped the trend green. Seems like we're going to push up here. Now, do we have to go to new all-time highs? No, it could definitely fail, but we're going to start testing resistance. We're testing resistance now. We break through that. We're testing 42.77. We break through that. We're testing 45.45. We break through that. ATH, baby, let's fucking go. But I mean, let's be real here. You know, we have a low. We have a higher low. We have a much higher low. We're back on top of the slope line and it's blue. We have a low. Then we have a much lower low. So we see some bullish divergence. We push up to a lower high. We put in a higher low. Get back on top of the slope line. We don't print divergence again right here. But oftentimes that's how an asset bottoms out, or the beginning at least of the reflex rally. So it was red right here the whole time. We almost flipped it up, almost flipped it up, almost flipped it up. This time we did it. So this is the most strength we've seen in a long time. And we're still pretty low. I mean, we're still, I don't want to say we're in like some deep, disgusting like retrace or whatever, but we're still down 15% from the highs. If we want to get back to them, you know, that's basically a move up 18%. So, you know, that's not bad. If you're a bull, I mean, this is a pretty constructive consolidation, correction. Again, not trying to be overly bullish, but, you know, if you got a system and you don't trust it, what's the point of having it? So the Qs, looking okay, breaking through that descending resistance, retesting the 200s, got out through the 382, broke out of this little like range. Looks decent. Something like, you know, a double bottom. This is the next area to watch. 330. I don't think it's crazy to think the Qs bumps up here another 10%. The way we've seen everything moving. I mean, Tesla moving 10%, 12% in a day. Apple, Amazon, all these tech stocks, you know, 5, 6, 8, 10%. Microsoft moving, you know, up, down, ending up nowhere. Lots of volatility. So NASDAQ, IXIC, little double bottom right here, back testing of the 200s at resistance now, trying to clear, you know, what amounts to, again, a little W double bottom. If we break through, probably get the measure move, the back test of the previous resistance, somewhere around 13,094. Wait, did I just do the NASDAQ twice? Oh, my bad. I'm sorry. I probably just did that instead of the old Ruddy. You could tell I'm just an NPC. I don't even think. I just speak. Hang on one second. Let me pull up the Russell. God, that was the most NPC thing I've ever done publicly. All right. All right. So here we got the Russell. You know, basically had this little double bottom, higher low, very important, back above the 200s, flipping the slope line blue, retesting that key resistance. If we break through this, you know, it looks like we're going to 2016. And then after that, you know, I mean, realistically, the Russell consolidated in this range above 2123 for a while. And the breakout of this little channel we're in right now is basically just a retest of the breakdown level. So we just basically come back up here, and then if we just extended this out, you know, that's just the measure move, is like the retest of that level. So it's not crazy to think that that would be our target. If we break through this 1919 level, we go straight to 2130. Now, percentage wise, I mean, 11%, you know, it's nothing to write home to. Okay. We're not going to be retiring off 11%, but there's definitely some potential. All right. So we'll take a look at the sectors real quick and then we'll jump over to some cryptos. So XLE, energy, retesting the highs, crushing right now. Got to be careful of energy as it does look like it wants to roll over right here. The best thing it can do is just kind of consolidate around this level. Maybe even come down and just put in another low. Higher low, rather. XLI, industrials, broke above that previous high. Flipping the slope line blue, a couple percentage off the highs. I mean, what does this tell you? It tells you that people are not scared of, you know, I mean, this tells me they're not scared of recession. Or there's going to be a bunch of government spending that's going to keep all this propped up. I mean, which arguably. Financial sector, again, same thing. XLF back above the 200s, trying to flip the slope blue, back testing resistance. We break through this level. And I mean, we're just a couple percent off all-time highs. The market wants to go higher right now. It's up to, this is the way I look at it, okay? The trend has been down for a while. And for a while, we were just floating in our little inner tube, you know, drinking our like Busch Lights or Coronas or, you know, whatever you kids are drinking these days. So we're having our drink, we're floating in the inner tube, and it's just taking us downstream. And we're doing nothing, okay? Every once in a while, we pop out, you know, we take a leak in the water or whatever. Or, you know, we grab a stick and shake it at a snake, whatever the hell's going on. But we're just casual. Now that's not the case. Okay, now we have to actually pay attention. You know, the water's getting kind of rough. We're lost. We're a little buzzed. Not sure exactly what's going to happen. That's what's going on in the market right now. Now, very soon, we'll just be trending. We'll just be trending in the opposite direction. Very, very soon. All we have to do is just go sideways here. So the easiest thing the markets can do to be strong now and to flip this trend over and to build confidence is basically just go sideways. Now, if they just shoot up all of a sudden with just some macro, like one candle back up to like retest the highs, that doesn't give me much confidence. What I want to see is people just slowly build confidence over time and get more and more bullish and start looking, oh, the daily looks good now. Oh, the weekly's starting to look good now. Oh, the monthly's saved again. That's where the real confidence comes from. The quick counter trend moves oftentimes are, you know, exactly that. There's a quick pump that you miss out on before you go lower, or a quick dump, you know, that takes away your profit and scares you before we go higher. It's like the bull trying to shake you off or the bear trying to shake you off. So financials looking okay right now. I think the best thing they do is go sideways and then they just push up as people build confidence. But United States stock market is starting to look really good. Starting to look really good. It's crazy to think, but I mean, it is what it is. And it's not that hard to believe when you really just think about inflation and say, well, what if inflation does stay at 3% or 4% or 5%? Is it crazy to think that earnings stay high? Is it crazy to think that businesses still have pricing power? Is it crazy to think that, you know, labor still has power for raises? I don't think any of that's crazy. I mean, labor market is still tight. I don't care what anyone says. People are saying, oh, it's getting ready to fall off a cliff any day now. Tech just fired 10,000 people. Look at the real numbers. Go and do the work for yourself. Don't just listen to mainstream media and all these talking heads and everything. If I have a business and I hire 100,000 people and then we don't talk about that, we only talk about when I fire 10,000 people. Sure, it sounds bad. Oh, 10,000, that's a lot of people. Those are real people. They're not just numbers. Well, what about the other 90,000 that just got a job in the last couple of years that I still have working for me? Even if I cut another 10 or 20 or 30, you know? I don't know. There's not enough independent thought left here. So be real careful. Material, again, I mean, basically about to retest the highs, a couple percentage off of the highs here. Very, very strong. XLP. So we see the staples kind of weak here. Obviously, that is a safety sector. So as the money kind of came out of these and the musical chairs shifted, we see a little weakness in consumer staples, in utilities as well. Obviously, safety sector. We are once again, though, retesting that bottom channel. So when I turn that back on here, it's worth paying attention to. We've been in this channel since... Are there dinosaurs? Sir, do we have... Oh, wait. Do we have to go to the weekly? Someone told me there's a dinosaur hack. Let's see if it's true. Yep, it is too. There he is. Our boy's back, baby. So anyway, we've been in this trend since 2008. So we've been in this little channel here. So, I mean, it's worth checking out. The fact that every time we have threat in the bottom of it, we've had a pretty aggressive bounce. You know, we broke down from it here. but we're back down to threatening it again. So if these markets really do take off, are utilities going to break down from here? We're going to get some insane fall off a cliff situation? Maybe. I don't know. Probably just buy support and then sell resistance. So long utilities, which, doesn't bode well for the rest of the market. If the dollar looks like it's ready to bounce, utilities look like it's ready to bounce, the Fed is getting ready to come out and do their thing. Interest rates or TNX, whatever we're using. Yeah, it looks like there's about to be a relief rally in the stuff that's been pressured. And that's not good for all the stuff that's been pumping. But what happens after that will give us a lot more information that we can analyze, and we can be a lot more confident about, the directions to follow. So it's actually a good thing if we see a counter trend rally now, or go back to the predominant trend and then put in higher lows, etc. So transportation, not looking nearly as disgusting as it has been. Not quite breaking out yet, but above the 200s. Tech, we have already looked at so much tech. We looked at the NASDAQ. We looked at the Qs. Do you guys want to look at any other tech tickers? XLC Communication has basically gotten back up to where everything's at here, back on top of the 200s. It's trying to push up here. And we do see like that weakness, that strength in Meta and some of the other, new age communication stuff. XLY, consumer discretionary, finally had that little pop to the upside. This had been by far the worst performing, which makes sense. And now people are a little more confident. They're out here spending money on dumb stuff. Hey, maybe the economy's not that bad. Maybe we did get a soft landing. We do have to be careful, though, because one common theme we're seeing is a bunch of these things are at resistance or slightly above resistance. And we are definitely still in a downtrend. And every time we have gotten up in the bullish control zone, that was the top. Bullish control zone, that was temporary little top. Bullish control zone top. Bullish control zone here. Is that going to be a top again? That or a breakout, one way or the other. It's a coin flip. And I'm fully behind getting behind a bull trend, getting behind a bear trend. But I think the most important thing is to figure out, okay, how am I going to quantifiably identify the trend when the switch is taking place? And how do I know when to now be bullish and when to now be bearish? So that's the hardest thing for most people. So I think that's why I just stick to a simple system like this. Because then it's like, I can't accidentally trick myself into not believing something so simple as color red, bear, color blue, bull. So let's look at these crypto connects here. So we saw the futures. Obviously, we're keeping a close eye on futures just to make sure that we see that confluence between them. We did see that gap up today. Over the weekend, we had some decent price action on Bitcoin. We saw the gap up above the 200 exponential. So now 200 exponentials on top of the 200 simple, and they're both blue. Well, take it back. They're not both blue. One is blue. One is not quite blue yet. Almost flat slope. All we got to do is just go sideways. And it will flip blue. And that will start looking good on the daily. And arguably look like, maybe this is the bear market's over. Maybe we did bottom. Maybe the money printer go burr. Maybe continuation. We're going to flip over to the weekly here too. So here's the problem with the weekly, and what we really need to be careful of is oftentimes when the shorter time frames are already looking good, the longer time frames start looking good right at resistance. And that's what we just talked about basically like the hard buy, the bullish control zone was actually the top, like the last few peaks that we had. So we have to be careful of that here. We have cross bearish right here in December of 2021. Here we're crossing bullish now at resistance, at the 200 exponential, at the 200 simple, while we were below them. Now we're in between them. So we're very close to building a very, very strong weekly uptrend, which is great. That's what we want to see. We basically just went sideways forever, reset. Sure, we had a 75% sell-off, but we didn't really see a meltdown capitulation. Sure, we violated the previous, peak of a cycle, but if we can hang on to the 200s, I think, it looks good. If we get back above the 200s right here, we flip the slope line over blue. We have blue slope line down here, a bunch of green histograms, momentum to the upside. That's best case scenario. Well, other than just going straight up, but best case scenario for reality. As we talk about magic internet money. Bitcoin on the daily, regular chart, way above the 200s, flipped over blue. This is what you want to see. Bunch of red histograms as price continues to melt up. That means people are literally, every sell-off we get, every little bit of downside pressure we get, people are just swooping in to buy it up. They're gobbling it up like fucking fiends, okay? Now, is that a good thing or a bad thing? In my opinion, it's a bad thing because we don't need crackhead mentality back in crypto right now, or stocks or whatever. In general, that's just bad. But doesn't mean we're not going to take advantage of it. Now, obviously, let's be real here. Obviously, if we see all these assets start making new highs and crypto starts pumping and next thing you know, we're at 30 and then, pumping up and shit coins are going nuts and, all this stuff. If we see that happen again, that's worst case scenario long term for like the world and like the economy and like macro. That's the worst case scenario. The best case scenario is just a slow march up over time as people regain confidence and we continue to see good earnings and, no recession, and we just kind of continue just climbing the wall of worry, so to speak. Okay, we just start checking off boxes like, actually, like Russia and Ukraine are working out peace. Actually, the winter wasn't that bad, so now we have plenty of natural gas. Actually, just one thing after another until the market's like, and we're back into, irrational bullish exuberance. That's much better than we just start like skyrocketing to the moon again. But that doesn't mean it's not going to happen. So Ethereum looking good, still above the 200s, still looking pumpy. Same thing, consolidating. We see the indicator oscillators coming down as we build strength, as we stay above key levels. That's good. That's strong. Markets look strong. We reclaim the 200s. 200 exponential is blue again. Now we did it here, and we lost it. So it doesn't mean we can't go back down, but we're putting in higher lows, and Ethereum's trying to start putting in higher highs. So it's going to test, 1768 soon, and then it's going to test 1938 soon. And then after that, we're talking 2,500 and then 4,700 and then 20,000. Boom. That's it. And that'll probably all happen in the next 1 to 3 days, roughly. Give or take, I don't know, like 3 or 4 years. So total market cap on the daily. So we are... this looks good. It's still the Bitcoin chart. It's still the exact same Bitcoin chart. Bear market. We're back inside, arguably trying to start a new bull market. So the key is what we really want to see happen here in a perfect world where we're just like, we're conservative, but we also buy bottoms and sell tops because, that's what we do. Sure. Okay. So right now, bear market here, starting to look like a bull market here, starting to look a little overextended. So again, best case scenario for a constructive move out of the bear market, which doesn't have to happen. We can just start going parabolic on crypto again. But the best case scenario is we kind of consolidate here. We test down to another low again. We put in a higher low. We get back up here. We put in a higher high. And we just start building constructive, like price action back up to 1.5 trillion and 1.75 trillion and then 2 trillion and then new all-time high trillion. But realistically, we want to see this kind of cool down. We want to see it come down to like the neutral zone to 40. We want to see, does it hold support here or here? Do we come all the way down here? But most importantly, higher low when we see a pullback. And we will see one eventually. And it's possible crypto total market cap will be at 1.15 trillion or 1.2 trillion. And then it'll come down. And when it comes down, it only comes back to a higher level than we're at right now. But when it bottoms, we can buy with much more confidence. We can add to our positions. We can start using the L word. So Bitcoin dominance, again, 821 trending to the upside. Still looks like it wants to come up here to like 48%. This is everything against Bitcoin. Here is Bitcoin against just the shit coins, no stable coins. Slightly stronger, still holding on to that trend line to the upside. It is trying to get back up above here. Multiple green histograms, blue slope line, entering the bullish control zone. Maybe this is what the Bitcoin breakout looks like. It's just, here's the problem with this chart right here, is it keeps telling us the truth right when everything else is lying to us. So this told us we were about to see the breakout from the lows on Bitcoin. This told us that we were about to see, Bitcoin at least performing or overperforming short term against all the other shit coins. And that's what it's telling us right now. It's telling us, hey, we're banging our head on resistance. We're getting ready to test this level again, which means Bitcoin is going to take back another 5% market cap. So it's going to get 10% stronger relative to the entire rest of the crypto market. It's hard for me to believe that happens while we're going up, because people almost always, as they go further and further out the risk curve, pull money out of Bitcoin and then put it into the shitcoins. But to tell you the truth, when we've been going down, everything's been kind of going down the same anyway. So maybe the days of Bitcoin underperforming to the upside and, I don't know what the correct term is, like underperforming to the downside, as in not going down as much. So it like stores value a little better, but it doesn't necessarily go up less. Maybe that's the future. I don't know. It doesn't seem realistic. It sounds like crazy talk to me. But who knows? I just don't see it. So maybe that Bitcoin dominance chart's giving us a little hint of what's to come, at least short term. So Matic back on top of the 200s. We're so close. We don't want to get greedy on this, but I mean, we're right there. So as soon as we tag that 618, that'll be 50% up from the entry, which is nice. And we did come down here very, very close, but that's how we know we're doing a good job at where we put our stop losses in, or where our line in the sand is. When we see it come down and it does test that area, but it holds strong, that's how we know we're doing it right. Now, after that, does it still go higher? It probably does. And again, this looks very, very bullish. If we start seeing continuation, Matic probably outperforms most stuff just because its chart looks better. BNB is still looking good as well. So, I mean, we see BNB, Ethereum, Matic, Bitcoin, a lot of these things are starting to look good now. I'm sure there's tons and tons of other trash cryptos that are looking good too, technically at least. Fundamentally, I mean, probably are terrible. Probably no one working on them. Jake and Logan Paul are the designers of your favorite crypto. So gold, we're seeing some short term, little bit of weakness here. I mean, this thing has been ripping. We now have confirmed bull market on the daily. Again, we have hard sell signal in the bullish control zone, bunch of red histograms. So it looks like, again, we had a nice rally to the upside. We need to come back down. We need to build some positive price action. We need to find some support above the 200s, whether it's, right here at the 21, whether it's all the way down here at the 200s. We want to see that constructive support and then go higher from there. But gold is looking good. It definitely saved that weekly trend. It's looking super sketch there for a while. So silver is getting smacked down like a little bitch. Let's be real here. It's having some serious trouble getting above this level. Matter of fact, this time it didn't even come up to it. Now, it doesn't mean it's not just building up strength to go higher here. It is starting to look bullish on the daily. It is starting to cool off the indicator oscillators while it goes sideways, which is good. So if it does test back up at these levels, it's got a pretty decent chance, I would say, of breaking right here. Coming down here, consolidating, building strength, building momentum. One big push takes it straight back to 30. And then after that, I mean, realistically, it wants to go to 50, doesn't it? GSG trying to reclaim this channel here off of some key fib levels. Doing okay for now. Flipping into the bear market, trying to save the trend. This does not speak well for energy and commodities if this does continue to roll over. But if inflation continues to persist, if the dollar stays weak, I mean, I would expect all these commodities to do extremely well. So if you're one of those people that's betting against the dollar and saying it's go to zero, I mean, by all means, don't tell me, show me. Put your money where your mouth is. Let's see what happens. I'm literally taking the other side of the trade. LNG, basically just hanging on to this trend. So we'll see what happens. It's at the 0.5. It's at the 200s. It's trying not to break down here and go into the bear market. It's building some constructive momentum back to the upside, but used a lot of energy and went nowhere. So we will see. Mosaic, had that little crazy gap down here. Back testing the 200s. At this point in time, a high, a low, a lower high, a lower low, probably another lower high, and then target 33. Home Depot in the house. This one's still doing nothing. So we'll see. I mean, it's still above the 200s. All it's got to do is go sideways. And to tell you the truth, I mean, this trade setup looked pretty freaking good at 327. So how's it look at 315? I mean, for me, I really want to see it come all the way down here and then really get that dirty under $300 entry, that bad boy entry, and then ride it up like 25%. That would be ideal. AMD. So this one looks like it's setting up to break out. This is obviously like borderline, cult coin, whatever company. I guess it's not really a coin, but meme stock kind of era, but also an actual company. So we have the 200s, we have the descending resistance. It looks like it wants to test those. A lot of other stuff has already broken out, especially in the semiconductor space. We've got the Chips and Job Act. I'm sorry, that was a joke. Sorry, that's not funny. That's not funny at all. That being said, I mean, if this thing does break out, it's probably going to go like 33%. I mean, the real resistance is here. Obviously, there's a little bit right here. But, I mean, could we work this? Man, I put this on the radar last week and mentioned it, and it hasn't done anything. And obviously, we got the Fed meeting coming up there. So we don't want to go all the way out this low because that's just too much. What if we just go from this fib right here and that previous little touchdown support? I think we could get a viable trade set up. That's like 3-to-1. That's like roughly 3-to-1 up to this level. So there's some potential. I mean, a lot of this stuff looks overextended. It's crazy to start taking like more long trades into this, especially as we're taking profit. But these are the ones I'm going to be looking out for on Wednesday. So Visa had a nice little pop up here after that little craziness. Looks like it wants to hit that measure move or at least attempt to push up there. Back to new all-time highs, obviously. Now, if it is going to top out, 786 is where it'll do it at. Lulu not looking so hot, starting to roll over here back underneath the 200s. Now, this is it. I mean, this is the line in the sand. Been talking about this one a little bit, finding support at the 200s. And honestly, it's kind of just lower high bounces here. And then we put in this higher low and then another higher low. Here we put in this high, then another high. So when we look at this really, and we'll look at the monthly too on this one because it's definitely interesting. When we look at this really, we have this descending channel and then we bounce the 200s and then we start forming this ascending channel. And then we're really just backtesting the breakout. So this is kind of like the line in the sand. It's like, all right, we either surge from this level or we break down from this level. I'm kind of okay either way, honestly. Now, when we flip over to the monthly, this looks kind of gross because we basically have this massive uptrend back to 2017 when this was $60 adjusted. And then here we go into the bear market at 347. And now here, this looks like a push up and a rejection back below. The 821 cross was trying to happen and didn't. So we are putting in higher lows. We are putting in higher highs. That's good. But we got to be real careful how this monthly closes. Because it was looking okay. This pretty aggressive candle coming in right here. A close above 330 would have been really nice. But, now we're talking about 7% back to the upside in 2 days to not look gross. Now, also, this thing did cool down quite a bit. Went all the way from the bullish control zone back to the bullish control zone. Bearish divergence printed between those two highs. Then all the way from the bullish control zone to the bearish control zone touched 20. Didn't quite enter the bearish control zone. And all we did was go sideways. So this could be setting up for just a massive uptrend continuation on the monthly. But in the meantime, I'm just looking at this. I'm just looking at this scalp off the breakout. Here we basically came down to the bottom of the level where it was like, if we're going to go back down from here, it's going to look gross. And then we found support even higher. So, this looks juicy to me. And realistically, 30% upside, 10% stop loss. And actually, you can get it at a better price. So again, obviously, none of this financial advice. I'm not your financial advisor. These markets are extremely volatile. Please remember you should trade responsibly. We back test 786. We already touched the 618. So next target 786. If we hit the 786, I mean, sure, we might slow with the 886, but might as well back test previous all-time high. That's 50% with 10% stop loss. Now we're at 5-to-1. And then realistically, I mean, if you look at the fundamentals on this sweatpants company that is exclusively sold at Walmart, let's take a look at this garbage trash bag Walmart company that literally makes sweatsuits and that's it. No other products. I mean, 2019 revenue, 4 billion. Net income, 645. Profit margin, 16. 2020 is 4.4, 588, and 13%. Revenue this past year, 2021. I mean, it's obviously 2022 just ended, but the numbers we have are for the 2021. 6.2 billion, 975 net income, profit margin 15.5%. I mean, that's insanity. I mean, it went from 3.3 billion revenue to 3.9 billion revenue to 4.4 billion revenue to 6.2 billion revenue. I mean, this thing is growing. Yeah, I mean, it's hard not to be bullish on this company. Fundamentally. Technically, you could lose me here. If you F this up, Lululemon, you could lose me. So let's talk about the worst stocks in the entire market and why I'm just setting money on fire with my most recent entry. I mean, it hasn't happened yet, but I expect to. The entry happened, but the burning hasn't happened yet. Speaking of burning, let's look at Tilray. Ooh, that was a good transition right there, if I do say so myself. So Tilray on the daily. I mean, this thing is just trash. Completely just melts down. If you ever put any money into this and you didn't take it out, you basically have just lit your money on fire. That being said, you know, we're at resistance once again, getting ready to backtest the 200s. Definitely some upside potential if and when this thing is bottoming out to backtest the 236. It's like a 40-something% move to the upside. But that's not actually what I bought. I bought this trash company, this garbage cannabis stock. ACB took the entry at the 821 bull cross right here. There's a bunch of room to the upside. So this thing could definitely melt down and go straight to zero. Matter of fact, I assume it's already at zero. It just hasn't happened yet. But, you know, essentially, stop loss at 78 cents. Hang on. It goes to zero so much that TradingView doesn't even know how to show it on the screen. So you're looking at like roughly, I mean, that's an overshoot on stop loss, but let's say 20% stop loss. You know, you can put it at new lows. I don't want to get squeezed out on some BS wick down, but 20% down, 60% upside, 3-to-1 risk reward ratio. You know, if you're going to put a big 20% stop loss and you're like, that's too much to risk. Well, the position's too big then. If 20% of $1 million is too much for your stop loss, you know, 200,000, then your position is too big. So you just say, well, instead of a $100,000 position, I'll enter a $1,000 position and then I'll risk $200. And you're like, problem solved. And, you know, there's a lot of gray area in between. So it's okay sometimes to have a big stop loss if the risk reward lines up, but you have to align your position accordingly. Like, I'm not going to take 10% of my trade account and just straight up put it in a 20% stop loss type scenario. It's not going to happen, because if you take 10% of your account and then you lose 20% of that 10%, that's 2% of your whole account gone. That's terrible. No way. So you have to decrease your position size to account for our ridiculously large stop loss. But then, you know, I mean, the upside on something like this, of course, we take some profit off the table at 62%, but realistically, it's like 300% if we finally break out. Now, again, this definitely goes to zero for sure. But I was going to light some money on fire just for the hell of it. And I was like, you know what? I'll just put it in cannabis stocks instead. So we'll see what happens. We're seeing the Stochs kind of roll over here a little bit, but a lot of times we'll bounce and then see one more stab up. I'm not too excited on these things, but to tell you the truth, here's my main problem with pot stocks and why it's hard for me to get bullish on them for something different to happen, is they've just been melting down. And like, I know people that like bought them way back when, rode them all the way up to the highs, and then just rode them all the way down, and are now like at massive losses because they were adding on the way up. So I know there's a lot of selling pressure on these things, and some of them just aren't necessarily good companies. That being said, do I think it's crazy to potentially trade for a 60 to 300% reflex rally off the lows? No, not at all. I mean, these things are beat down. So sure, it probably goes to zero, but I'm in it. So we can all laugh at me lighting part of my trading account on fire if they decide they're going to bomb. Which, of course, is like the worst time to be like putting money in the worst stocks. But who knows? I mean, who knows? I could be completely wrong. Maybe the market gets what they want from Powell. Everything surges. Pot stocks rip. Back in the bull market. We're at new all-time highs in the next couple of months. Soft landing confirmed. Yeah, I mean, It sounds crazy now, but does it? Does it? So let's jump in the chat here, see what everybody's doing, and then we'll just wrap it up. Keep it nice and tight like a tiger. 55 minutes. Okay, we're ahead of schedule. All right, what's up, Hex Evolved in the house? Damn, did I miss much? Depending when you wrote that, the whole stream. Depending when you wrote that. If you just wrote it, it was the whole stream. If not, probably just the intro. A lot of gray area. Parag in the house. What up, brother? Not much, man. Hopefully you're doing well. So we're going to be keeping a new record. I know that's right, man. I usually go like 3 hours, way over. I've been trying to kind of condense them down, talk a little faster. And then one day I'll actually do static videos again, like I've been saying. One day. So yeah, I mean, we pretty much knocked it out there. This is really a big week. You know, my main rule is typically with like big fundamental events, you know, whether it's a Fed meeting or, you know, Ethereum going from proof of work to proof of stake, or what I say, earnings, Fed meeting, like any of those like fundamental type events, I personally just don't have an edge. Like with the Fed thing, I can kind of like work out the scenarios and have a slight edge, but with stuff like earnings and stuff, I don't really have an edge. So I don't like to take a lot of new positions. I don't want to bet on a coin toss, whether we just like surge up 10 or 20% or surge down 20%, whatever. It's just not really my style, but I'm more conservative. So that being said, you know, if you want to gamble, by all means, that's how I look at the kind of like short-term fundamental events. But once we see what the Fed does, once we hear what JP says, I'm assuming he's going to come out in a sort of shiny light blue tie. If we see that, I mean, that's a signal. We all know what to do. If we see the kind of shiny light blue tie, and also that has to be coupled with one other thing, and it can't be one or the other, Jerome Powell has to come out and look like a bitch. So if he comes out looking like a bitch with a light blue tie on at the Fed meeting, regardless, we know what that means. So, and I mean, I don't have to explain it to you guys. I don't want to bore you here, but so keep an eye out for those two things. And it has to be both those things. But honestly, I think realistically, we probably do get 25 points. But the truth is, I could full on see the Fed going for the shock and hitting us with 50. Now, do I think that's a good idea? Not necessarily. It might calm the markets down some. I don't think it's good for the economy. I think really what the Fed needs to do, the honest to God truth right now, I think the Fed needs to just go sideways. Do nothing. Now, after this 25, they have to do what the market's expecting at least. They can't do less. But if we do 25 basis points and then the Fed honestly does say, hey, we're going to pause and see what's going on here. If we continue to see inflation prints come down and, you know, preferably some kind of easing in the job market as well, that's actually really good, like for everybody. We don't want to break stuff. We don't want to see other people's bond markets or, you know, currency markets breaking. We don't want to see that stuff. So I know people like to bet on doom and gloom or like to be scared of the end of the world or whatever, but chances are actually that just the same thing keeps happening, which is, you know, the Fed comes in, cuts rates, saves the day. We go back into another bubble. The bubble pumps. We go to new highs. Then it gets out of control. Then the Fed tightens. And, you know, more likely than not, more of the same, in my opinion. So it's really up to inflation. Obviously, inflation different in everybody's country. Inflation being measured differently with like changes to how they're doing stuff and the baskets and all that. But inflation is trending down. That's what the Fed wants. So if inflation keeps trending down, the Fed just goes sideways and, you know, keeps markets tight. What we got roughly, what is it? 100 billion? God, I can't even keep, the numbers are so big. 100 billion coming off the balance sheet roughly every month. So, you know, that's pretty good. That's like, you know, $1 trillion a year roughly, you know, give or take. That's kind of a big deal. So the longer we go sideways for, I think that's probably all we need to do. There's a lot of tightness in the system. We talked about how essentially it's like the time capitulation. And I think that basically sums it up. Because here's the truth. People talk about, oh, the housing market's going to crash because valuations and interest rates. And they can't both be high. Well, I mean, nobody's going to sell their house if they don't have to. And they're not going to get foreclosed on if they have positive equity in their house. So with the exception of people who like, you know, overextended and did like cash out refis, which a lot of people did cash out refis, but most of them did it with a much higher property value or the property went much higher afterwards. So I just don't think that without a long time event causing stress on businesses and, housing and all these other things, I don't think that it's going to be an issue. Now, if we stay and go sideways and the Fed stays long and fiscal and monetary policy stays tight and we see that go on for months or years, something breaks. Sure, of course it does. It's just a matter of, does it break somewhere where it matters? Does it break in the United States? Does it break in, an important country in Europe? And again, I'm not saying you don't matter. I'm saying, does it matter to the people that matter, which is the Fed, the central banks, etc. So yeah, I guess we'll go ahead and wrap it up there. We all worship the Fed. Please give us bull. Yeah. I mean, here's the thing. Okay. When the markets are bearish, I'm bearish. When the markets are sketchy, I'm skeptical. But the truth is, I mean, life is so much easier in a bull market. So I'm definitely rooting for a bull market. Now, is that good for all of the debt that we're robbing from future generations? Is that good for all the excessive spending that governments are doing around the world that will be later taxed through inflation or, enslavement, however you want to look at it, of future generations to come? Is that good? No, of course not. I mean, slavery is definitely bad, whether you tell people they're slaves or they just don't realize it. But regardless, that might be the outcome. Are you and I going to change it? No. So if it is blatantly obvious, if it is going to happen, if we are going to go to new all-time highs, we might as well at least take advantage of it. And then we can make a better life for ourselves, our family, our friends, whoever. That's how I look at it, and then you can take that money then, and then you can be a philanthropist. Okay. But if you're not trading, or you don't want to long the markets, or you don't want to, invest in a Ponzi scheme for some altruistic reasons or something like that, just sit there for a minute and say, if I had an extra $1,000 or $100,000 or $1 million, could I do more to help the world than if I don't have that money and I'm just a good person? I mean, I would say probably use the money to do good stuff, not just be a nice guy. But that's just me. So, but obviously you guys know, if you listen to anything I say, you'll end up living in a van down by the river. And that being said, we'll go ahead and wrap it up there. Appreciate everybody tuning in today. Hopefully you guys had a good one. Looking forward to this week. This is the one we've all been waiting for. Last couple grands trickling down the hourglass. I mean, who knows? Maybe this Fed meeting is just going to be a big old fucking nothing burger. And we're all going to be left with a dirty bite of that burger. And then markets are just going to surge, and that's it. And who cares? And the Fed pauses and we go back to, parabolic asset gains. That's the easy world. So we'll see. I don't think we should be overly bullish. I don't think we should be overly bearish. I think we should be skeptical and conservative, protect our principal, conserve our capital. And then after that, easy money coming. I mean, it's January. We're already crushing. So let's keep it up. Obviously, January coming to an end. We got a lot of stuff to watch here. Excited for this week. I'll see you guys on Wednesday, 8 p.m. Eastern Standard Time for our midweek market update. See all the group members in between. And with that being said, we'll wrap it up there. I am, of course, Crypto Trend Trader. It is 9:04 p.m. on Sunday, January 29, 2023. And I'm out of here. Everybody have a great week. Good to see you guys. Peace out.